Hey traders, Raghi here, and in this week's update, we're going to talk about two major catalysts coming up next week. And it's one thing to have one of these on any given month, but to have them both in the same week, especially as we kick off the fall trading season, is going to be major. And what I'm talking about is number one, the FOMC meeting that's coming up on Wednesday, on the 17th. And then options expiration, or OPX, and this is the quarterly variety, which is much more, in terms of money and volatility, much more impactful than even the monthly variety. We're going to have that on Friday the 19th. So with those two catalysts, we want to prepare as traders for where are the opportunities and how to time our entries around these two events. So first of all, entries have to start with a watch list, and every Monday, I put together a watch list based on the top 10 outperforming sectors, and then I'll find the top stocks in each one of these sectors. So I'm looking at relative performance. So I'll typically stick with the top 10. Now, a lot of times this is going to put us looking at stocks that aren't of the norm. It doesn't mean that we're going to be necessarily looking at Tesla and Nvidia and a lot of those favorite stocks. But it means that gold miners, solar, airlines, home builders, oil services, regional banks, metals and mining, right? Communications. You can see the list here. This is where I'm looking for that outperformance. Now remember, when we see things that are up, it doesn't mean that they're necessarily toppy. It just means that there's a lot of flow and a lot of action. If you're concerned about something being toppy, here's a quick tip. Cut out the top, say 2 or 3, maybe 4 sectors, and look at some of the sectors that are positive, but in, say, the middle of the pack. So a lot of times people ask me, Rog, if you're looking at something that's already made such a big move, couldn't it already be done? Well, I'm never going to presume that I know where the top is, and I'm never going to presume new highs are ever bearish. But again, if you're wanting to catch something that may be a little bit more on the ground floor, find something more in the middle of the pack in terms of outperformers, the main criteria being it has got to be positive on the month. So consumer staples, utilities, just aren't going to cut it for this. All right, that takes us to then, once we know what we're looking at, let's talk about what the next implication is, and that's the Federal Reserve. Now, the Federal Reserve meets on Wednesday, and I know a lot of folks know this, but that's not the beginning and end of it. There are two events. One is, what are they going to do with rates? That's the first thing to consider. What are they going to do with rates? And ultimately, the thing with rates is, there is a tool called the Fed Fund Futures, which is a futures contract. And then that feeds this thing right here, which is the Chicago Mercantile Exchange FedWatch tool. And it takes all those Fed Fund Futures contracts and it distills it into this really easy to read format, which is what is the likelihood that we cut or hold. Once we understand what this means, it's really easy to understand. I call this the Federal Reserve magic decoder ring, because rather than hearing all the gobbledygook about all the talking heads on television, we now know exactly what we need to know. We know the percentages, we know the timing, and this makes it really easy. So we don't have to listen to all the speculation, all the woulda, coulda, shoulda stuff, right? What are we expecting? 94.5% expectation for a 1/4 point cut. Now, how do I know that? Well, currently the rates are 4.25 to 4.5. If we move to this column here, that's 4 to 4.25. So this represents a 1/4 point cut. The next level here you might see, and some folks, you might hear some discussion that there's a 1/2 point cut in the works. Well, if in the works means a mere 5.5%, sure. But we work in the world of probability, not possibility. And the probability is still very much the 1/4 point. Now, could Powell surprise? He did so last year, right? Instead of cutting a 1/4 point, he cut a full 1/2. Now, there's a couple things that might increase the probability that he surprises the market to the upside. I mean, number one might be that annual BLS, Bureau of Labor Statistics revision. And that's the one that showed that there were far fewer jobs created since, what was it, March of last year. That's one thing that might change whether or not Powell becomes a little bit more dovish, because he himself, right, I mean, Jackson Hole said the labor market's weakening, and now we know just how much. And you got to wonder if he knew that then too. So now that we all know, this is still most probable. So interestingly enough, traders have not discounted the half-point cut in a more reasonable, in a higher way. It's still very reasonable to expect a quarter-point cut. All right, well then, let's fast forward to December. Where are we expected to be? What could this first domino fallen mean? Well, again, we're presuming we're going to be here come the 17th of this month, right? And come December 10th, the last meeting of the year, we are expected 74.8% to be at 3.5 to 3.75%. So that means we're likely going to see a cut in October and then also a cut in December. So 3 quarter-point cuts at the next 3 meetings. There's no meeting, by the way, in November. I guess they need to take a month off. Good for them. All right, so that's what we have there. Now, you might say, Rog, why do I care, right? Why do I even give a rip about this? Well, if I've got relative outperforming stocks, which we just looked at, that top 10 list, and maybe I want to look at the middle of the pack so there's a little bit more probability of some more upside follow through. And then we have 3 quarter-point cuts potentially coming. Look, rate cuts are not bearish. Now, the reason for the cuts may not be good. And the follow through as the rate cuts have been factored in could start to wane. But anticipation of cuts, which is the window that we're in right now, the expectation of these cuts to come is usually very bullish. So that brings us to the last thing of what we're talking about here in terms of those major catalysts. And that is, what does this mean in terms of the OpEx or the options expiration? So the third Friday of every month is the big options expiration. And that means usually the most number of contracts are expiring. Now, think about who's going to benefit from something like this. Who benefits from options expiring? Options writers. Who are typically options writers? Banks, brokerages, funds, right? So if they're the ones that are writing it, and they're also the ones that are controlling the flow. Remember, they have pending orders that they need to fill. They have client orders they need to fill. So if they can control the flow specific to Friday, which let's face it, they can to a certain degree. When we say they're going to drive it down or they're going to drive it up, who's they? People who have orders that need to be executed in the market. That's really it. So whoever's moving the size around. Right now, we're punching up to brand new highs. So we can see a lot of the Fed Fund futures expectations already being priced in. But the question I get a lot of is, Rog, haven't you seen what happens in September? And I have. And let's go take a look at that here really quick for those of you that may not know. There is a high expectation that September, especially about mid-September on, so in this case, the drop is somewhere around, well, historically starting this week, maybe next week, the drop is historically in this window. This is September 12, this is September 15. Remember, the Fed meets on the 15th, OpEx is on the 19th. So what could cause a move like this? We don't have to move down like this, but we could pull back. So in this case, what I want to remember, and let's take the S&P, for example, because I can walk you through this. And by the way, if this is interesting to you, say, Rog, I know there's something that's going to happen next week. I'd like to capitalize on it. I'd like to not get, kind of swayed by all the talk and the fear-mongering and the confusion. I'd like to make a plan based on what I understand so that I can direct my own order flow. I can put on my own trades. On Monday, this is going to be the 15th. So this coming Monday, the 15th, at 7 p.m. Eastern, I'm going to be doing a special session in the Sector Secrets Mastery Trading Room and in the MTT room and the Mastering the Trade room. So if you're a member of either one of those rooms at 7 p.m. Eastern, log in. We're going to be doing a full session on the details and the kind of setups and the watch list that I'm building for that week, because I'm going to do a lot of that work on Monday going into those events Wednesday and Friday. Now you might say, okay, Rog, I'm watching a free video and I don't have access. If you head on over to sectorsecrets.com, there's a $7 trial you can sign up for. And in that $7 trial, you can get access to this session that I'm going to do. It's 30 days of my Sector Secrets Mastery Room, and you can join us for that special session, as well as the rest of the month, where I'll be setting up trades based largely upon a lot of the things that are going to happen next week. So I want to mention that because I really don't want you to miss out, and you can get 30 days with me. So next week going into those events, and then the following 3 weeks after. All right, so let's take a look at the S&P for a moment. A lot of questions I get is, Rog, when are we going to pull back? Well, the when we've kind of talked about. If there's going to be a catalyst for a pullback, it could be Wednesday. Yes, we're going to get a rate cut, but what if the press conference that happens 30 minutes after releasing the rate decision isn't as dovish, isn't as favoring rate cuts as traders would like to hear? What do we do then? Well, what's going to happen then is we'll likely pull back, or there can additionally be a buy the rumor, sell the news reaction, which is we all expected the rate cuts. You saw how highly they're anticipated. And so we get the thing that we expected, buy the rumor, sell the news. And so that's another way we might pull back. Well, going into Friday, we have options expiration. So I'm going to show you how I look at this. And we can do this on any symbol. This isn't just the S&P, but a lot of folks ask me about the S&P in particular. All right, so let's take a look at the SPY. All right. And what I'm going to show you is the September 19 option chain here. All right. This is just a taste of what we're really going to deep dive on Monday. So what I'm looking at is the 19th. So that's a week away. And that's that OpX date, right? Options expiration. And ultimately what I want to remember is that when we hit OpX, there is one goal and one goal only. I don't use max pain. Right? I actually don't think that's as effective as what I'm going to teach you on Monday night, and also what I'm going to cover a little bit here with you. So take a look at where we are right now, 658.26. So that's going to put us right about here, right? Now ask yourself, if this is Friday the 19th and we're sitting at about 658, what do you think the value of the options for this part of the option chain, these strikes, what do you think they're going to be worth? Not a whole heck of a lot. They're at the money with no time. They won't be zero, but they'll be pretty low. Now, what about 659 or 660 or 661? Well, as we get closer and closer to Friday, if we stay around 658, all of these calls, right, are going to be lowering in value. They're going to be losing value. It's a depreciating asset. It's running out of time, and it's out of the money. Yeah. All right. So then the next thing is, rather than max pain, we look at the open interest, this column right here. We look at the open interest for the chain. We ask ourselves, where are we right now? And where would price have to go within reason to knock out more options and render more of them worthless, or as close to worthless as possible? And all of a sudden, 655 should get everyone's attention. Now, once you can see, it's pretty unlikely on Friday will be above 660, and that there's a pretty good chance we could move down towards this level to leave 30,600 options virtually worthless. If we talk about I know we all do, but the folks who control the flow, if they can move price down towards that level, I'm telling you right now, we see this every third Friday, especially on these quarterlies, the triple witching. We see it even more so. So I'm going to show you how on Monday I would take this information. Number one, the watch list. Think about what we've been talking about the last 13 minutes or so. Starting off with that watch list. Where do I want to be focused for these pullbacks where there's relative performance? Then I want to understand the implications of what the Federal Reserve is likely to do. Very clearly, we expect a rate cut on Wednesday, and we expect him to open the door to a rate cut in October and in December. If he falls shy of that, weakness. If he's pretty nonchalant about it, buy the rumor, sell the news. And here then comes OpX on Friday. So we're going to start to pinpoint levels like this. And when you come to the session on Monday, it's going to run about an hour or as long as it needs to. I'm going to run it for about an hour though. And what I'm going to do is walk you through and take your questions. Hey, Rog, what are the implications for Apple or NVIDIA? Rog, what are the implications for, it doesn't matter, whatever stock or sector you want to take a look at, we can break it down, see if it would be on the watch list, and see what kind of setups we can take advantage of. All right, so that's my video for today. Hopefully this gives you an idea of what's coming up next week, how you can prepare for it. Notice these are all free tools that I'm using. This is the Thinkorswim options chain. I don't need anything fancier than what comes with my brokerage platform to understand where these open interest levels are, right? And then, by the way, this particular website that I was using for the relative performance is a site called Koyfin, Koyfin. And then lastly, this is the CME Fed Watch tool. If you Google that, it'll bring you right to this site. So that might be a little bit of homework before I see you on Monday, 7 p.m. Eastern in the Sector Secrets Mastery Room or in the Master in the Trade Room. This is what I'm going to be sharing with you all. If you're not a member, you can check out the $7 trial at sectorsecrets.com. All right, so we're going to walk through a lot, set up some trades. I'm going to show you how to build a watch list. We've got a lot coming up. Super excited to share it all with you. All right, gang, be good to each other. Have an awesome weekend. And if you have any questions or comments, leave them below. Thanks for smashing the like button, and I'll see you later.